What's going on, squad? Happy New Year. In this one, we're going to be covering You're Sitting in a Bubble Right Now, a letter I wrote a couple weeks back. This is kind of the mood for it. Several questions recently on, is the stock market going to crash? Are we in a bubble? Is Bitcoin going to go to 20,000 to zero? Right? Like, there's a bunch of questions like these from time to time. And one of the things that I always try to go back to is understanding the real game, right? Most people leave their money in cash. This is the first piece and why I said we're already in a bubble. Most people leave their money in cash. They think their money in a Wells Fargo account is relatively safe because they get so fixated on nominal. Remember, don't get so focused on what's on paper, focus on the reality of your life. So that's kind of the piece that I start off with. If you search within the past 10 years, your dollars have devalued by 50%. So if you had $1,000 10 years ago, it still says $1,000, but it's devalued by 50%. So your wealth has gone down by half. And since 1913, the dollar has devalued by 96%. This is the reason why I'm saying most people fail to realize this, because you look at what's on paper and not what is the real situation in your life financially. All right, let's go to the next thing. Welcome to the Matrix. So I said this in the last video I posted, but again, the Federal Reserve continuously prints more money. The more dollars chasing the same amount of goods and services means your money devalues. So this is the piece, man. Like, I don't know how much I could explain this for people to understand this, but this is the secret sauce. If you understand this, if you're watching this right now, and you could actually understand what I just said there, you're going to be significantly more ahead than your alternate self that didn't. All right. Now let's get to the question though. People are asking, but stocks are cooked, right? Stocks are overvalued, things of that sort, right? Since I graduated high school, this is something that I've heard time and time again. Right? People have been saying stocks are overvalued. The market's been up over 150% since then. Since COVID, it's been up around 50% or more. And look, we could be absolutely right that stocks may be overvalued, but at the end of the day, if you still have your money sitting on the sidelines and waiting for a crash that might not come for years, even if your stocks are overvalued, what are you going to do about it? Like, are you just going to sit on the sidelines and just think you could time the market? And to add on to that, right, which is the next section, there's a study that's called the Dalbar study. I might be pronouncing that wrong. And it basically tracks what real investors do with their money every year, and it calculates average return. And this is something that's super important that you guys need to tap into. So from 1992 to 2022, the average return in the markets has been 3.6% per year on investment. So now think about that. You're like, damn, that's kind of low, right? On average, the market has gone up 9%. Why is it so low? I'll tell you why. People freak the F out and panic sell when shit gets scary, and people buy in when things are going really well. So it's kind of like the quote from Warren Buffett: be fearful when people are greedy, and be greedy when people are fearful. JP Morgan did another study and says that if you were invested in the stock market from 2000 to 2020, you made about 6% per year on average. But if you missed the 10 best days in those 20 years, and this is the most important part, if you had missed the 10 best days in the stock market in that 20-year time frame, your return dropped to 2.4%. And if you missed the 20 best days, you basically make nothing. So the moral of the story is we have no idea what the hell is going to happen in the market. And usually the best days in the market are when there's a lot of uncertainty in the market. So this is why if you are someone that thinks you could time the market, the stats simply show that that's super false. And when you tell me stocks are overvalued and you're going to wait for a better entry point, what you're really saying is you're willing to miss years of gains just to avoid potential crash that we can't predict, right? I can't predict it, you can't predict it, and this is the point that I'm trying to get across, okay? Even if the market does crash tomorrow, all right, let's say tomorrow the market opens and it crashes, the first trading day of 2026, which eventually market crashes will happen. Are you really going to have the cojones to buy when everyone else is panicking. Because again, the people that sit in cash waiting for that perfect moment typically never go in. And this is what I'm trying to get across. I'm not telling you to be reckless. I'm not saying to go in on meme coins or, put all your money into options, whatever, right? Like, I'm just saying understand the actual risk of your financial well being. The risk isn't the stock market might go down 30%. The risk is that your cash is guaranteed to lose 3 to 5% per year. Um, so, yeah, understand index funds, something that you could diversify your money in. Understand your cash is losing value year after year. And the math is simple, guys. We're in the bubble already, whether you like it or not. Let's go.